What's up, traders? Welcome to this week's episode of the Weekly Watch List, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on our broad market. We've got our core list of companies that we're always watching, and this week I've got 3 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. As always, anything we are associated with is linked down below in the description, and without further ado, let's jump right into these charts. Kicking things off on the SPY weekly time frame, talking about candle structure and location as we always do. For structure, we certainly have a bullish candle, a little bit of a lower wick, but nonetheless a solid response from the buyers, closing us up at the highs of this week's session. You'll also notice there's virtually no upper wick on this candle whatsoever, so we definitely have to give structure to the buyers this week. It's very clear also that location will go to the buyers, noting that we've made a candle by candle higher high and a candle by candle significant higher low. But let's read into this low just one step further than that. Remember that this green bar here was an engulfing bar. Keyword engulfing. What does that mean? Well, we took back multiple weekly highs. Where did this week's low go? Right to the highest of those prior weekly highs and not a tick further. So because we did not travel back down into any of that prior engulfed range, to me, this is a significant higher low on the weekly time frame. So 2 for 2, structure and location goes to the bulls. We also know that we have the failed pattern now of the head and shoulders here. 2 fake breakdowns, number 1 in this lower wick, and number 2 right here, immediate recapture of the neckline, and we're continuing to move to the upside away from that neckline. So to me, this pattern just gets closer and closer to being invalidated. The true invalidation point would be up and over the right shoulder, indicating that we would no longer have the potential for a lower high, right from here to here to here. Still could possibly be a lower high, but if we take that double top out right here, we'll talk about that on the daily in just a moment, that certainly negates our weekly head and shoulders. And again, I think the bullish move away from this already has negated a majority of the bearish implications from the pattern itself. So from the weekly perspective, things are looking bullish here. The only concession I could make is the fact that volume is tapering off just a little bit, but this isn't really a bearish implication. Instead, I think it's just an indication that momentum is starting to slow down. I mean, think about what's happened so far. We've come all the way from these lows all the way up to this high. Have we seen a weekly pullback? The answer is no. Have we seen a weekly consolidation bar? The answer is no. So are the buyers running out of steam? I would say, yeah, just a little bit, and that's completely acceptable, noting the rally that we've been on so far. So in terms of volume and what's happening there, it's not a bearish implication, but it might mean that we shouldn't expect as much momentum to carry forward into this upcoming week to the upside. So that's what we've got on the weekly. Let's drill down to the daily and start talking about tradable levels into this upcoming week. What are the numbers? Well, here's the double top, the right-hand shoulder of the regular head and shoulders on the weekly that I do think the market's trying to target, and that number is at 457.50. After that, what do we have? Well, look left. There was fairly thin structure on the way down here. Our next daily target is way up above, around 473. Now, I'm not saying that the market is going to make it there this upcoming week. Could it? Yeah, the market can always do whatever the market wants to do, but I do not think that that is obviously a likely probability. Instead, I think we could be in store for that consolidation. Not only is it evident in the volume here, but we'll take a look at some sectors which are also pointing to a little bit of risk off, maybe consolidation before we continue this trend to the upside. So in terms of levels to be watching out for to the downside, in the case we do get consolidation, the first one is at 446. Now, why is that the number? It's best illustrated on an hourly time frame chart. You can see here we had prior resistance, hold as support on the open for that nice little rally there. The next day, we hold it on the open as well, but as we crack, the sellers do try to keep prices depressed underneath, but it didn't last very long, right? That did lead to a significant break to the upside and a new higher high on our daily time frame. So 446 is the ideal rainbows and butterflies type area for bull flag consolidation. If we look at that on the daily, that would look something like this, correct? And I mean, if you draw in the flagpole, you draw in the flag, it's hard to argue that that's not high and tight ideal consolidation. So 446 is the first number. It's also the daily 200 SMA. Underneath that, we have the prior high and then support from here around 441, roughly the 50 SMA on the daily. That would be your next level to the downside for something that does that. And my line in the sand for the upcoming week would be 437, noting it was prior structure highs, lower low right here. And also, if we take out the Fibonacci's from the low, up to the high, it's roughly the 38.2. We're always going to opt for structure and not just blindly follow the fibs, but 437 is my last line of defense essentially into this upcoming week to remain in ideal bull flag consolidation mode. Now, there's a couple of things I want to point out. We'll get to the sectors in just a second, but from a psychological standpoint, think about how many people might have missed this move higher. If we get a bull flag that forms somewhere in here and we start to take the top end of it out, think about all of the people who missed the move, maybe have fear of missing out. They don't want to miss this second move. That's added buying pressure. If we start to crack this double top high, I do think we could make it here sooner rather than later, okay? And again, I'm not thinking it happens this upcoming week, but if we put in some type of pattern, a bull flag ideally, I do think over the course of time, this could be achieved sooner rather than later, just from a psychological aspect, okay? Now let's drill into some of these sectors and start talking about, what's kind of going on here, which would lead me to believe that maybe we are in store for some sideways consolidation. Energy, why is it breaking out to the upside? That is not a good thing for your S&P 500. Generally, this is a defensive asset class. So because this is breaking out, maybe we see some pullback or sideways activity in the SPY. The same thing holds true for utilities. Again, a defensive asset class, light in terms of sector weighting, breaking out of this picture perfect bull flag, not a good thing for the S&P 500, right? So this is defensive. As these things start breaking out, maybe your SPY cools off as the heavier weighted sectors take a little bit of a breather. Continuing along, we have financials. Still poised in a bullish location, don't get me wrong. This is ideal consolidation, clearly putting in a higher low from here to here to here. You get the gist. This is in a bullish state, but we know the majority of this work is being done from interest rates continuing to scream to the upside. As and if the TNX continues its move higher, expect the XLF and financials to benefit from the higher rate environment. So XLF, bullish. Is that putting upward pressure on the SPY? Absolutely. But we do have some real heavy-weighted sectors towards the bottom. We'll get to those in just a second. Let's continue through the list here, the lineup. We've got builders screaming to the upside. Could it use a pullback? Yeah. Is it a heavy weight? Absolutely not. Not overly concerned with pullback risk here inside of builders, but if it does pull back, it's just one more piece working to maybe put in some sort of sideways consolidation in the SPY. Real estate, what's happening in this one? I think that the inverted head and shoulders is still in play. We have not broken the neckline. If this does break the neckline, again, real estate is more of a defensive asset. Maybe it means that your SPY gets more of that sideways consolidation as some of these defensive names come back into play. XLP, this one defensive as well. Consumer staples breaking the resistance trendline. Again, why is this happening as the market's screaming to the upside? Maybe it's time for a little bit of consolidation, some defensive posturing as we get the sideways move, a little bit of pullback, right? So as these defensive names start moving higher, I'm just sort of drawing the line between them and saying that the SPY may be due for a little bit of a cool-off. That's all. XLI for industrials, again, breaking out. This is a lightweight sector, not overly important, but if it continues higher, maybe it's a little bit of upward pressure on the SPY, but not reading into it too much here in the XLI. Communications instead, more of a heavier weighted sector. You can see it's starting to grind to the upside instead of being in a nice, bullish environment. Don't get me wrong, it is bullish, but look at the volume taper and start thinking about as people are getting longer and longer and longer, and they're getting paid less and less and less because we're just putting in very incremental higher highs, it increases the odds for a liquidation break. And we'll talk about liquidation break as well in just a moment. So the XLC is at risk for some sort of pullback, which again would lead to a larger pullback in the SPY. The XLV for healthcare, more of a defensive asset class, defensive sector, but nonetheless poised in a bullish location. Look at this beautiful pullback, starting to make the move back higher, clear higher low, right, from here to here to here. This one looks fantastic. If we crack this 137, what do we have to the left? Thin structure on the way down. Maybe it makes it up towards the highs, and that's upward pressure for the S&P 500. But overall, these two at the very bottom of the list, these ones have me slightly more concerned, right? Just the fact that the XLY is going sideways, consumer discretionary. Again, why is the S&P continuing higher when the heavier weighted sectors like this are going sideways? Maybe it's time to cool off a little bit in that SPY itself. Do continue to monitor this because, it is starting to put in bullish consolidation. Don't get me wrong. The chart is still poised in a bullish manner, but maybe it means that if this continues sideways or even gets a little bit more pullback, the SPY starts to pull back a little bit, just drawing the difference between, a screaming chart to the upside versus one that's already starting to consolidate. The XLK, very similar, right, is in terms of the XLC with these incremental higher highs. So I think as more people start getting longer and longer and longer and longer, we increase the odds for that liquidation break and deeper pullback to come in the XLK. Now, don't get me wrong. It does not mean that we're bearish on the marketplace. As a matter of fact, as I pointed out from the psychological standpoint, I do think that if we get consolidation here, it's going to be an incredibly bullish second leg based on all of the people who potentially missed out on the first one. I'm going to draw one last thing, which is going to be on the VIX. As the market has been going sideways, we mentioned this in the midweek market update. If the market was going sideways and the VIX continued to collapse, that's going to be a good thing for remaining bullish in the market. That's exactly what happened. The flip side scenario was, okay, the market's going sideways, but the VIX starts creeping up. That's a red flag. And that did not obviously happen. As you can see, we're coming back down towards that 2050. So it doesn't mean all of the volatility is out of the marketplace, but people are getting more comfortable about moving back into some long positions. Now let's talk about liquidation break here over on our market internal screen. A beautiful example happened on Friday. Look at this move to the downside here. Is that stronger selling in the market? Absolutely not. It comes out of nowhere, right? We had an opening range break to the upside. We're getting some acceptance above the overnight high, and then all of a sudden, nasty move to the downside. What were the internals doing during that time period? You can see internals were bullish on the advanced decliner, holding around the zero. So maybe it's just more neutral. It's not necessarily bearish or bullish. What was going on with volume? Above the zero line, breadths were probably mixed, just like this, not really bearish at all. What was going on in the ticks? Really compressed, right? You can see the cumulative build is flat. So is this a stronger seller? Absolutely not. It's just longs with poor trade location up here that sell out of impulse because they're not getting paid any longer, and that attracts some shorter term sellers. Now, the fact that this has retraced 100% should mean that shorter term sellers who thought that this was the start of a larger down leg in the marketplace got stopped out. Ideally, as people built shorts in this area thinking that, okay, aha, this is it, the pullback's going to start to come. As we take that out, hopefully a majority of them started stopping out in here. So not only is it not stronger sellers stepping into the marketplace, it's taking out of the market short-term sellers who essentially got in on an impulse and never got follow through to the downside either. So this was liquidation break number one, and we also had one on Monday. If I scroll back here, where is Monday? Here we go. You'll notice, again, a bullish pattern starting to put in bull flag consolidation. Suddenly, a break comes out of nowhere. What is that? It's all the longs in here with poor location. We're unable to make it to the high of day. They panic, they sell. That makes this move lower. Shorts get trapped down at the lows, and we continue on our merry way to the upside, retracing a majority of that. So again, it's not a longer-term seller, and short-term sellers should be stopping out as we start to retrace that move to the upside. So again, this strengthens the market. It does not weaken the market. So everything that we've discussed so far, let's go back on over to the SPY, is pointing to the fact that we should get some sort of consolidation. And then as and if this pattern starts to break out, I do think we are poised for a fairly bullish second leg. That's been an in-depth analysis on the S&P 500. Let's continue along and talk about our QQQ NASDAQ 100 and what's going on here. I think the picture is fairly similar. Again, you're getting those incremental higher highs, so there is risk for liquidation break. In this one, we do want to see consolidation above 352. If I zoom in on this, you'll notice, again, it's the low end of structure here. It's not quite the highs from in here, but look how we've respected it. If I go down to the hourly again, you'll see this area quite clearly. So consolidation just below, that's where your liquidation break happened from on Monday twice, right? We had resistance, break, retest, and back to the upside. So 352 first pivotal support. Down underneath that, we have 346. You can see that cleanly here. Also prior resistance in this area. And then anything underneath that is 340. I really don't want to see the market back down at 335 in the QQQs here. I know it looks like a lot of lines, but if we do the same thing with our Fibonacci's from the lows up to the highs, notice how nicely these ones coincide on the Q. So your 61.8 is essentially that 335. I do not want to see the market down there. The 50% is that 340. That to me is the line in the sand for the upcoming week. And your 38.2 is roughly that 346 that we saw clear as day on the hourly time frame. So those are your pullback levels to the upside. If we do see a breakout after some period of either pullback or consolidation like this, I do think the market's targeting the 200 SMA and the double top here from that weekly head and shoulders pattern. Essentially 369 is the number. And then after that, it's all about the resistance trend line here in the QQQ. Note that this one still has a resistance trend line, right? We made that significant lower high way sooner than in the S&P 500. So that is still something to contend with. Again, do I think it gets here over the course of the week? Probably not, but just keep that on your radar if over the course of time we get that bull flag. And again, that second leg does develop in your QQQ to the upside. Let's round out the broad market with IWM, none other than Russell 2000 and our small caps. What's happening here? Beautiful bull flag consolidation. I would point out that on the Thursday session, we actually saw a little bit of a fake break of this level. Notice how we had the lower wick. We closed back strong inside of the flag consolidation up here. Technically, that's a look below and fail. I would be targeting 208, and we know that 208 is the significant pivot from the weekly time frame. Let's just illustrate that. I know I sound like a broken record, but here you go. There's 208. If we can break into that after a nice bull flag here on the daily, I think things are looking good for more of a risk-on type environment for our marketplace, and maybe that builds the case that after some daily consolidation in the SPY, we do get that significant bullish leg, the second leg of the bull flag. So that's what we've got in the IWM. If it does crack underneath 204 again, ideally, your line in the sand is the 50 SMA, the blue line, and the horizontal top from in here around 201. We do have a support trend line in place at this point in time, so we would still produce a higher low if we did something like that. But to see this remain in the most bullish, optimal state, you do want to see this bull flag remain intact. Okay, so that's what we've got. Upside level after that is 212, then probably your daily 200 SMA since we have not interacted in quite some time. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every time a new video comes out. Kicking off our companies here with Apple, the rally continues to scream to the upside. We've been up 9 days nonstop, no pullback, no consolidation. Are you going to chase it long up here? The answer to that should be absolutely not. Could this continue to float away like a balloon and you're just trying to grasp at it as it's moving up towards the clouds? It could do that, but I don't think the risk-reward profile is favorable at this point in time here in Apple. The time to get long was on a break of this resistance trend line and recapture the level here, a break of this resistance trend line here. Now is not the time. Your upside reward is essentially only up towards 177. We have to assume at resistance there will be some sort of selling pressure, and your downside risk for a pullback is at least to 171. If not, the better level would be 167. Why do I say it's a better level? Simply because we have many more data points there. So support, and then resistance, right? As opposed to this one right here is a little bit choppy. Don't get me wrong, 171 is still a critical level, but 167 would be a better pullback to watch out for. And also, again, it's not to say that Apple's bearish. That's clearly above your 38.2, keeping us well within the bounds of healthy bull flag consolidation. So Apple, you do risk pullbacks at this point in time. If you want to intraday scalp it to the upside, that's absolutely fine. I'm not saying there's anything wrong with that, but the risk reward profile for anything longer than like a 5, 15, maybe 30-minute hold just doesn't really seem favorable at this point in time. So 177 is your overhead resistance. After that, I mean, all-time highs are right there in Apple. 181 is the dominant resistance. Sure, the all-time high is slightly higher, around 183, but 181, I would imagine, provides some sort of battlegrounds for the sellers. So that's Apple in a nutshell. Again, I would probably be patient on this one and wait for a better setup at this point in time. I would imagine that pullbacks are viable. Think about the people who have missed out on this move so far. Once we get that consolidation, once we get any sort of bullish pattern that develops and people identify that, they recognize it, maybe it's off to the races for a second leg higher. So Apple, a little bit of patience is required in this name. Next up, we have Netflix. This one sort of remaining in the bull flag down at the lows here. So here we go. Much better than Apple. This is much more tradable, right? You can tell that if we take out the highs, which are at 382.75, the next target's the 50 SMA on the daily and the structure from in here around 397. Very obvious setup here. With two hammers back to back on Thursday and Friday, I would start to lean bullish, especially noting that some of those lower wicks actually punctured the low end of the flag and we closed back inside of the range. So again, just like IWM, a little bit of a look below and fail type phenomenon going on here, I'm remaining bullish inside of Netflix for the break of that level into our overhead target 397. After that, the next resistance is 412. If it does break down out of the flag and we do something like this and then just dribble lower, I'm not necessarily getting short on Netflix until we firmly break back down underneath 362.35-ish coming from this set of highs, right? After that, sure, we have thin structure on the way back higher. There's really no structure to be trading for. I would imagine that we could start to trade short through that range, getting closer to 332. Noting also that the daily dominant downtrend would still be intact, right? So that's what we've got in Netflix. In the short term, though, definitely watching this bull flag right here. Next up, we've got Tesla. It's all about 1,000 in Tesla. You'll notice I've got some blue lines on our chart, which is a fairly rare occurrence. What does that mean? You'll notice that we've got multiple inside bars the past 3 days in Tesla. So here's your container, nasty inverted hammer. To me, that should have led to a pullback. It didn't. Obviously, we're getting 2 days of consolidation and acceptance inside. So if we can break 1040 to the upside, that triggers, the break of the inside bars. That setup's complete to the outside. We would look for our next daily resistance at, 1,114 coming from this. And to the downside, it's just the same, right? If you take out the container bar low, the outside bar low, which is roughly 980, look for your next daily support, which is going to be here, prior top end of the range, which was also a breakout point at 945. So in Tesla, watch out for bull flag consolidation. That would be, this type of pattern right here. And we would favor upside, but just don't forget that it can take out the low end after putting in, beautiful inside bars back to back like this. If it takes out that 980, don't be surprised if we do get the move back down into that 945. So play this one day by day. Watch out in between these blue lines and take the break to the upside or the downside for those levels that we just discussed. In this environment, I would have to say that this is leaning more bullish than bearish. Obviously, with the break and recapture of all of this chop from in here, the volume was surging on the way up. As we're getting this hold, it's muting down just a little bit. So we're favoring the upside, but don't be surprised if it does take the low end. Maybe we get a little bit of a pullback here inside of Tesla. AMD is up next. What do we have in AMD? Trying to play catch up, right? Taking out the 3-wick highs in here. Next target's going to be up around 124. We're above the resistance trend line at this point in time, but notice how it wasn't really a firm break via price. It was just kind of like sideways through it at first, and now we're trying to play that catch up mainly to what NVIDIA is doing. We'll take a look at that chart in a moment here. But nonetheless, the activity, it's trying to be bullish, but it's just not getting into gear like a majority of our other things have been. What I like about the activity so far as we head into this upcoming week is the fact that Friday did respect the prior 3-day highs around that 117.50. You'll notice it's a little bit of a doji, hammer-ish type doji, noting that the body's slightly skewed towards the upper third. But nonetheless, as long as we hold this, maybe it's consolidation and we continue our merry way towards that 124. If we start breaking down, to be honest, the downside does not look attractive whatsoever here inside of AMD. Noting how choppy it's been through these ranges, it seems like you'll get a lack of follow-through if we do move back down inside. Instead, the better short trade is probably patience underneath 110 for a clean break back down towards 100. And again, as of right now, does not look like a likely scenario. So for me, watch for acceptance above 117.50 and then start targeting these upper ranges if we get follow through in our broad market. QQQ, SPY, has a consolidation period, then sees a breakout into the end of the week. So those are AMD levels in a nutshell and my thoughts on kind of what's happening with the structure. Facebook, incredibly bullish as well. Breaking up and over, getting some acceptance into that 217 range from right around in here. Remember that it was support, then flipped resistance. We started putting in a bull flag, bull pennant up against it, and now we're inside. Definitely on Friday's session, don't get me wrong, that is an inverted hammer. It would indicate that maybe there's potential for some selling to step up here, but as long as we're above 217, to me, I just see it as a break, retest. Anything that can do this, fantastic. Looking for bullish opportunities into that 235 roughly. If we fall back down underneath 217, that does start to become a little bit more concerning, noting it would also be a break of this support trend line, which is maybe a little bit more obvious on the hourly time frame. You can see support, you get the gist, right? So if that breaks, we break back down underneath 217, first level 212.50, and anything underneath that to me starts to become much more concerning, noting that on the daily, it would open up the move into this and potentially start getting us closer to a 50% retracement of the overall move. Not a good thing when you get towards those that deep of a pullback, right? That level is 203.50 to the downside, the first one where we'd be looking for major support if that 212 breaks. Next up, we have NVIDIA. What do we have going on in NVIDIA? You can clearly see, just like your AMD, getting a little bit of acceptance above the prior wicks in here. Nonetheless, this chart is much more bullish to me. We are looking for a break of the 2-day highs after this beautiful little consolidation doji on Friday. If that happens, I would really just be patient, wait for, well, sure, it would be the break of the 2-day highs, but 287, critical level from right around in here. If that one cracks, that's where your next opportunity really opens up, closer to 312.34. Any consolidation that happens in here strikes me as bullish. Breakdowns underneath 272 could be a look above and fail, right? We've already seen a look below and fail on the 2-day range. So think about this right here. There's your look below and fail, target top end of the range. Here's your look above and fail. If we break back down underneath 272, target bottom end of the range here at 258.77. So there's multiple ways to play this one, but obviously the ball is in the courts of the bulls right now, noting that we've seen extreme bull flag activity here, solid momentum on that Thursday session, and getting price acceptance higher on Friday. I would lean on the long side, but just be aware of what happens if we crack Friday's low, right? Technically, that's moving back down inside of the range from the 2 days right here, and we could target the low end closer to 260. Next up, we have Microsoft. What's happening in Microsoft? Putting in a beautiful consolidation period. This is much more tradable. What do we have here? If we crack 305, look for your next range overhead, 311. We know that that was significant throughout here. Then after that, 318. To the downside, we have support coming in at 299. 300 has been the pivot for quite some time, but I liked the hammer that printed on Friday, right? So to me, the sellers tried to make it lower. They obviously failed. We closed higher in the overall range, the 4-day range that we're stuck in now, right here. So we are favoring upside, but if 299 breaks, look for your support trend line. Obviously, that would produce a higher low on our daily time frame. As long as we're above 289.50, things are all fine here inside of Microsoft. We're just getting a little bit of a pullback. So to me, watch for the bull flag. Leaning on this setup here, 305 to 311, but we'll see. One step at a time. Be mindful of the low end of the flag at 299. Next and lastly, we have AMZN, Amazon, the beast. What's going on here? Consolidation. Really, the most important thing to note about this chart is the price acceptance that's occurring over 31.76. Again, out to the weekly. If you're new here, we've been watching the low end of this right here. So support, support, support. It's also resistant on the weekly double bottom. It was the neckline. We've broken, and now we're getting price acceptance inside, right? So to me, that's a bullish indication on the longer time frames. For now, also, this move is starting to turn into a bit of a bull flag. Very, very steep support trend line. I'm not expecting that to hold forever, but if we can get into it like this, and then boom, produces a breakout that keeps things intact. Your breakout level is essentially 33.35, and the 200 SMA on the daily here in Amazon. Your next target overhead is 3,500. Why is it 3,500? Well, if I scrunch out the chart, you'll notice that that's been a significant pivot. So resistance, resistance, support, resistance, support, so on and so forth. Resistance, right? So that's your upside level here inside of Amazon. If we get follow through from this bull flag, and again, from the weekly perspective, acceptance back above that 31.76. If we fail at 31.76, that does become slightly more concerning, but there's obviously opportunity for a higher low here around that, let's call it 3,100 for round number's sake. So be mindful of that to the downside if we crack 31.76. But as the chart currently sits, the bulls are obviously in full control. Quick reminder to hit the thumbs up button, the subscribe button, the bell button, all of those buttons YouTube tells us to tell you guys about. And let's get right into these trade ideas. First one is going to be on PYPL for PayPal Holdings. Nonetheless, we have a very obvious double bottom on our daily. There's your neckline. We've broken that neckline and we're getting bullish price acceptance above. That number is 112.75. As long as we remain above that, we are looking at the back half of the double bottom as a bull pennant, and the break there of the resistance trend line should take you closer to the 50 SMA and the prior pivot high in here around 125.23. So that's what we've got in PayPal to the bull side. If we crack underneath 112.75, let's say the broad market sees a significant pullback, then are you going to play it? It wouldn't be my first thought, but you do have thin structure in here. My first target would just be the low end of this move, noting that there is a gap there that you could potentially be looking for. Okay, so 102, we'll call it for round number's sake. The gap technically fills at $100.50. I'm not saying it does something immediately to do that, but if we crack the lows over the course of time, it would be a failure of the double bottom. It would be moving through thin structure. That's what you have underneath to be looking for. So PayPal, main objective is to watch for this bull flag to remain in play and get some sort of breakout into the 50 SMA. Notice also that on the move higher, it might be hard to see because of this earnings volume skew, but on the move higher here, volume was increasing, and as we're getting this sideways bullish price acceptance, volume is muted. That's exactly what you want to see when you're getting periods of consolidation, just indicating that the selling is two-sided profit taking. It's not aggressive positioning to the downside. Next up, we have TTD for the trade desk. What's happening in this chart? Another area of balance. Look at this. Beautiful equal highs, equal lows on Friday's session. Big volume, and it's a look below and fail. Notice how we have this lower wick that takes out the low end, 65. We've closed back inside of the range. I would be looking for any smaller time frame bullish opportunities to take us at least up towards the top around 69.21. From there, I would monitor for a breakout. Look left, thin structure on the way down. down. The next major target is way above around 86. Now, I'm not saying it gets there over the course of 1 week, but over the course of time, I could easily see that being a reasonable target if this bull flag wants to break, and a measured move would roughly take us to the 200 SMA. So maybe start eyeballing, 80, 200 SMA, 78, 79-ish area as your first target, and then monitor into the structure from the daily up here. Just watching this as a bull flag. Not too interested in taking the breakdown here, just noting that you have already the fake break once. The wick from here is at 63, we'll call it for round number's sake. The better short would be, okay, we clearly start putting in lower highs, building a descending triangle over the course of time. If it cracks, maybe you move through the thin structure, just like we talked about in PayPal. There is a gap to be looking for down below around 55.40 down to 54.25, but that's not really the primary objective of this chart. We are looking for the bull flag to pan out in the expected manner to the upside, of course. Next and lastly, we have JWM for Nordstrom's. What's going on in Nordstrom's? Nice little rounded bottom, cup and handle, if you will, respecting the top end of the prior balance in here. Coming into the top, notice to the left, we have a gap in our chart. If we start taking out 27.25 daily 200 SMA, these recent highs in here, there's some room to run because there's no structure there essentially into roughly 30.85, 31 even. So do keep this on your radar for bullish breakouts, especially if the XLP consumer staples wants to continue to the upside. This isn't the heaviest weight in that sector, but it is in the staples sector nonetheless. Look for follow through, right? So if XLP breaks out, as we saw earlier, maybe this gets a little bit of a tailwind, which pushes it higher towards that 31. Not interested in the trade if we end up taking out 25.50s. Give it a little bit of wiggle room in here, but really, if this double bottom is going to hold, again, cup and handle is going to kind of hold here. You want to see it above that neckline, which is 25.52. If it breaks that, I would just look for chop. Maybe it puts in something similar to this up here. Sure, it's a building block in the right direction, but not overly tradable if we're just playing ping pong in that range. So that's going to wrap up the video this week. If you enjoyed it or learned anything new, let me know in the comment section or by giving the video a thumbs up. Don't forget our main secondary channel, always making that mistake, is linked down below in the description where we've been doing 3 videos recently, a broad market video, the Fangman video, and maybe Tesla. So check that out if you're interested every single day doing some updates there. Nonetheless, I wish you all a green trading week.